Hello friends, how are you doing? Friends, there was announcement by government a couple of days ago that the savings rate across all government schemes has been reduced significantly. So people whose livelihood is dependent on the interest earning from these saving schemes, definitely they will get impacted. Now, a lot of my followers, they have asked this question that what impact the savings rate reduction will have on stock market, and what should we do? How should we strategize our stock market participation, keeping in mind that the overall earning from saving schemes will get reduced significantly. Now, I want to focus this video on this particular concept, and I want to give you a strategy which you can deploy for yourself and see whether you are ready to combat that pressure of having lower income from these saving schemes. Now, I suggest you go to a website. We have developed this lovely website called elearnmarkets.com/blog. Now, this is a blog portal which we have developed recently. It has fantastic content, practical oriented content related to various topics in the market in multiple languages. So you get in English, Hindi, Bengali, and we are adding more languages as well as part of our initiative of giving back right learning to people. In basic finance, you will get this article called Government/Interest Rates on Small Savings. Now, I can actually go down and see this. Yeah, this is an article. If I click this article gives you a immediate view about what kind of interest rate reduction has been done for this quarter. Mind you, this reduction is for April, May, June quarter. It may get extended, it may not get extended, but so far the government announcement is concerned, they have made the announcement for this quarter. The interest rate reduction has been largely on these schemes. The Sukanya Samriddhi account scheme, fantastic. I don't know whether you know about the scheme that if you have a daughter, this is one scheme where you should park your money for her. You can actually park maximum 1.5 lakh per year and you get a tax-free interest rate. The rate which was 8.4% earlier, now it has been reduced to 7.6%. In fact, more description about these schemes can also be seen here. So we have given you a link of the respective scheme, so you can click and you can know more about these schemes in this particular blog engine itself. So Sukanya Samriddhi scheme, the interest rate has been reduced from 8.4% to 7.6. The Kishan Vikas Patra interest rate has been reduced from 7.6 to 6.9. The Public Provident Fund interest rate has been reduced from 7.9 to 7.1, which is the lowest in last 43 years. The National Savings Certificate interest rate has been reduced to 6.8% from 7.9%. So across the board, if you see, the interest rates have gone down. In fact, if you ask your banker, the FD rate for coming 1 year has gone down to as low as 6.25%. So in this scenario, your interest earning has gone down significantly. Now, how do you strategize your stock market participation to combat this fall in your earning from these small saving schemes? Now, to do that, I want you to go to StockEdge app. And again, I'm asking you to go back to StockEdge app because StockEdge app is the one which has all the data. So for me, it's easier to communicate with you through my app. So you go to StockEdge app, and in StockEdge app, in equity, you get certain scans. So we have developed scans on fundamentals as well. Now, why I'm asking you to look at fundamental scans, because there's an important component of stock market which will help you to plan your investment against these fall in the interest rate, and that will be looking at the dividend yield. Now, friends, we know what dividend is. Let me just define it for you. When company makes any profit at the end of the year, company either retains that profit for the purpose of expansion of their business, or company distributes that profit as dividend to its shareholders, right? Typically, company do have this habit of distributing some profit because a company which is giving dividend on a regular basis is considered to be a good company, at least in Indian parlance. Whereas a company who believes that there is a growth opportunity in the business itself would prefer to retain money with them because they can generate better return on capital for their shareholders by investing the same retained earning into their existing business. So we'll have to keep a balance of both and understand what are the companies, which are the companies which are actually giving dividend on a regular basis to shareholder. So if you go to fundamental scan and if you go to dividend scan, in dividend scan, you can see we have given two category of dividend scan: consistently paying dividend and positive dividend scan. If you go to positive dividend yield, you get the list of stocks which are giving dividend and which have given good dividend yield. So when I'm talking about dividend yield, is the dividend rate divided by the market price. When you're running a scan here, you're actually running the scan for FY 2019, which is March 2019. Okay, so we have taken price of that particular date, which is March 2019, and dividend of that particular date. So that means the dividend yield which is coming here is actually related to that particular period. But nonetheless, to know what is the current dividend yield, we should actually scan each and every stock, because whether the company would be in a position to give dividend as on today, which is for FY20, will depend upon what kind of earning company has done in last 4 quarters, isn't it? So we have to see each and every company and see their track record and see their earning, whether they have made enough money and should we expect dividend from them. So let's go case by case. Let's go to one company at a time. So Indiabull Housing Finance. Let's go inside Indiabull Housing Finance and let us see their track record of dividend. So how do you see the track record of dividend? You go to updates, you go to corporate actions, and you get to see their track record of dividend over a period of last 4 to 5 years. So if you see company, this company has been giving dividend of around 9 rupees, 10 rupees, 6 rupees consistently over a period of time. So it's a consistently paying dividend company, right? But then we need to also see in last 4 quarters whether they have made enough profit and should we expect a dividend from them. So if you go to fundamentals and go to results, you will get to see the quarterly results of the company. In quarterly results, if you go down, you see PAT. If you see the PAT of the company, the overall PAT, profit after tax, is going down. It's in downward trend. So possibly, and it's a housing finance company, so you know the kind of problem the housing finance company has been going through. So possibly the company may not be in a situation to give dividend or may give lesser dividend right now. So you may actually decide not to go ahead with this company, considering the problem which housing finance companies are facing right now. If you want to know the current dividend yield of this company, you go to fundamental in overview, you get to know the current dividend yield. So current dividend yield of the company. So all the information here is actually related to current market price. So market cap is also live. Current industry P is also current. So current dividend yield is almost 41%. That's very, very high. But the problem is that it takes into account FY19. That means 2018-19 earning and current market price. Okay. If you see the earning of last 4 quarters, it has not been so great trend. So company may not actually come out with a dividend. So we will try to avoid this company. Okay. Next is your Graphite India. Let's go to Graphite India. Let's see their track record of dividend. So when I go to updates, corporate action, we see their track record of dividend. So company used to pay 3.5 rupees, 2 rupees, 5 rupees, but suddenly company paid in FY 18 and 19 12 rupees, 20 rupees, 35 rupees as dividend, final dividend as well as the interim dividend. That's a very heavy dividend which the company paid. Why did the company pay such kind of a dividend? Definitely they would have earned much more money. So let's go to fundamentals. Let's go to results. Let's go to quarterly results. Yeah. And in the quarterly results, let's go to PAT. And in PAT, you see, oh my God, look at this. The company is actually showing a fall in the profit after tax over a period of time in last 4 quarters. definitely this company will not be paying dividend the way it has paid in couple of quarter. And even if its dividend yield is say 39%, don't expect very high dividend from this company. So definitely this is also not to be kept as part of our dividend stock list. Now let's go to a third company called Vedanta. Now let's go inside this company and see the track record. So you go to updates, corporate action, and in corporate action you see the list of stocks. So you have 3.5 2 rupee list of dividends, so 3.5 2 rupees, 1.75, 2.5, 3.5. And in FY17, since FY17 18, the company has actually given very big dividends. Recently the company is not giving big dividend. Maybe that time company has earned a lot, that's why they gave dividend in FY18. Let us go to fundamentals and go to results and go to PAT and see, oh yes, the company made a lot of money in FY18. That's why they gave handsome dividend. After that, company has been making consistent money, but don't expect a lot of dividends from this company. Maybe possibly the company may decide to continue with the old level of dividends, which is typically let us go back again, which is typically 2 rupees, 2.5 rupees dividend, which the company would prefer to give. Okay. Let's go back to third company, Jain Irrigation. Let's see their trend of dividend, their pattern of dividend. So we go to updates, we go to corporate actions, and we see their pattern of dividend. So 1 rupee 50 paise, 0.75, 1 rupee. Yeah, so the company has been consistently paying moderate dividend to its shareholder. Now let's go to their performance results, and in results let's go to PAT and see the trend of the PAT. Oh god, this is very poor, very poor. So the company, I'm sure, will not be in a situation to actually pay dividend. So this is also not the company we would like to look at. If you see, there are various platforms giving you the list of dividend companies. If you look at pure maths, the dividend, if you just look at the dividend yield, you will find it to be very lucrative. But when you actually dig into it further, you find that possibly in this financial year, some companies will not give dividend and you may not like to look at those companies. Okay. So let us go forward. Dewan Housing, of course, is in a bad shape. Nalco, I think, is the same situation as other resource company. HEG, same situation as Graphite. REC, let's see REC. REC, let's go to updates. Let's go to corporate action and see the kind of dividend the company has been paying. 5 rupees, 10 rupees, 7 rupees, 11 rupees. Not bad. The company has this track record of giving decent dividend. Let's go to fundamentals. Let's see the results. Let's see the results and let's see the PAT. Oh, wow. This is good. This is good. So we have the Eureka moment. So we can see a company which has a good dividend track record, and the company has been also making money last 4 quarters. And if you see the dividend yield, it's almost 13%. Almost 13% dividend yield in this scenario is phenomenal. This is a stock which I would like to definitely track or invest as my SIP candidate. So how will I do that? You go to my StockEdge, you go to watch list, and you create a watch list called dividend watch list. So let me create a watch list called dividend stock. So you can actually create unlimited watch list in our app. You create a watch list called dividend stocks. Okay. And the watch list is here. Now you go back to that scan, fundamental scan, dividend scan. You can see the list of the companies. So you have this, we were talking about which company? We were talking about REC. And yes, we were satisfied with this company. There's something called star here right on the top. So you press star and you can add that company as part of your dividend list. So I just want to add this as part of my dividend stock. So yep, I have just added this company as part of my dividend stock list. So actually in StockEdge, you can press star to customize, add all the stocks or whatever you want to add in your customized list. So then you can track them and invest in them in future. future date. Then you have Hindustan Zinc. I think the same thing. All the mining companies have given last year in FY18 good dividend. That's why they are coming here. Oil India, Dish TV. So let's see Oil India. Let's go to updates. Let's see their, sorry. So, okay, let's see their corporate action. And in corporate action, let us see the dividend history. Looks like I'm having some problem with my internet. Okay, that's the dividend history. 11 rupees, 7 rupees, 10 rupees, 8 rupees, 9, 14. Fantastic. So this company also has the habit of giving decent dividend. I guess it's a PSU, so they have to give dividend to the shareholders, which is the government of India. And now you go to fundamentals, results, quarterly results, see the PAT. Not consistent earning. Sometime earning have gone down, sometime earning has remained stable. It's actually dependent on crude oil. So this is not the company where I would like to put my money on, because if it's a very cyclical industry. So if they don't make money from commodities, then they probably will not be able to kind of give dividend. So I would probably not look at this company because it is so much dependent on crude oil. Let's see the other company. Let's see Bajaj Consumer Care. Let's see Bajaj Consumer, because I'm also Bajaj, so I'd like to have a biasness towards Bajaj. So let's see their track record. So let's go to updates, corporate action, and in their track record, 2 rupees, 4 rupees, 6 rupees, 11 rupees, 12 rupees, 14. Wow, this company has a good track record of paying dividend. Now let's go to fundamentals, and in fundamentals, let's go to results. Let's go to results, and in results, if you see the PAT, oh yes, we got the eureka moment. So we have one more company, the private company, which is consistently making money and which is also have this tendency of giving dividends. So we press the star and we add this company as part of our tracking list. So we add this company in our dividend stock portfolio. Okay. So once you add these companies, once you analyze in this way and you keep on adding your companies and you understand their business model as well, it becomes relatively easier and more comfortable for you to kind of invest in those companies. Let's take one more. Let's take Bse India. I like exchanges. I like their business model. They just have to don't do anything, and they get a lot of money from brokers and the customers eventually. So let's see their track record. So corporate action. Okay, FY17 around 28 rupees, 23. FY18 is around say 28, and FY19 is around 36, and FY20 they have already given final dividend of 25 rupees. Oh, interesting. So this company has now looks like a habit of giving decent dividend. Now let's go to fundamental and see their performance. So if you see their performance, let's see their performance. Looks like some problem with the internet. So if you see their performance over a period of time, okay, let's see the PAT. Oh yes, so looks like this company is also had this habit of paying consistent dividend. So probably this could be also one of the candidate you would like to track. So you press star, and you add that company as part of your dividend stock list, right? Now, by doing, you keep on doing this, and finally you figure out a lot of companies who can give dividend, and then you boil down to companies whose business you can understand, and then finally do an SIP of 5 stocks on a consistent basis. And even if you can generate 7 to 8% annualized yield from these companies, it's fine, because anyways your FD rate is much lesser, is around 6 and 6.25% for a 1 year tenure. And these companies would have a potential to give you a higher stock price also eventually, because if they have tendency to give dividend and they have a higher dividend yield, generally there'll be enough buyers in those stocks at a lower level, because the yield keeps on going up when the price keeps on going down. So it will be a big incentive for the buyers to actually keep on investing in these stocks at a lower level as well. Now, where do I see the list of the stocks? You go to my StockEdge watch list. And in watch list you can see, okay, it's there right in the bottom. You can see all the stocks which I have added as part of my dividend list stocks, and you can actually run your own scans and track what is happening in those stocks. You can also see fundamentally if there is anything happening in those stocks, any news related to these stocks, any corporate announcement, any corporate announcement. You can actually download the PDF right from here related to all these stocks in the watch list. Any action, any result calendar with respect to those stocks, any kind of bulk deal, block deal, or any insider deal which is happening in these stocks will also be available in this watch list, right? So friends, what we have learned is that sure, savings rate is going down, and it is expected to go down further because that's the way it is. If you are moving towards being a developed nation, we should start expecting a lower interest rate also. So the best way to park your money is to also invest in higher yield assets, and dividend yielding stocks are one of the options which you can explore, and consistent SIP in those stocks could be one way to beat inflation or to beat the lower income from the interest bearing securities. Friends, just one more value addition. This budget, there was a major change in the dividend clause. Earlier, dividend was paid by companies as a dividend distribution tax, but now that has been removed, and now dividend received by the investor will be paid as per the tax rate of that investor. Okay, so anyways, from our discussion perspective, it doesn't matter much because eventually I'm comparing my return with my FD return, and the tax rate for both the instruments is eventually the same. But from a company's perspective, it actually would make sense to give them dividend because there is no dividend distribution tax anymore, and company would like to kind of give incentive to the shareholders by showing them higher dividend rates so that the shareholders remain in that company as a loyal shareholder of that company. So this is a small value addition which I wanted to give. I hope you like this video. I hope you understood the concept. I hope you are going to use StockEdge the way I've recommended you to use. I would love to see you subscribe to our features because what we are doing, the kind of effort we are putting in, is worth investing in us. So kindly make sure that you subscribe to our features as well, and you enjoy this whole engagement with us in creating wealth from stock market. Thank you so much for watching this video. Bye bye.